I'm Olindra Senior SO Budget from Western Railway, Mumbai Division. And today I'm going to tell you something about budget. Before I start, I would like to thank everyone who have come here to attend this lecture and encourage us. The topics for discussion are classification of expenditure, budget, the structure of railway budget, how the budget is prepared, and control over budget. Usually, expenditure in railway is of three types: revenue, demand system, or capital. You can say demand system like DF, DRF, RRSK, and the third type is non-budgeted items like PF, loans and advances, and civil grants. Now, first thing I'll tell you what is the differentiation between revenue and capital. Revenue means recurring expenditure like salaries, office expenses, fuel like traction, HSD, etc. Capital is expenditure of one time, which is purchase of locos, coaches, buildings, P-ways, means laying of tracks, etc. Revenue expenditure is limited to only 1 year, the benefit, whereas works expenditure lasts for many years. For example, when we are building a building, it will take 3 or 4 years. Even laying a track might take even 4 or 5 years. Similarly, works expenditure results in increase in earnings and reduction of expenditure. As you can see from this chart, capital expenditure increases operating efficiencies or adds to capacity. It increases the useful life of the asset, whereas revenue expenditure does not result in increase of life. It is only for day-to-day maintenance, like we do it for our homes and etc. Capital expenditure is debit side of fixed asset account, whereas revenue expenditure is debit expenditure for ordinary maintenance and repairs. What does capital expenditure consist of? It is for assets. It is like initial cost, additions, betterment, and extraordinary repairs. Revenue expenditure is normal and ordinary repairs. It is also operating expenditure, expenditure on hospitals, etc., like medicines which is done in the hospital. It will come under revenue expenditure. Now, this expenditure has been classified under various allocations. That is the Finance Code Part 2. It came into effect on 1/4/1979. It was based on the recommendations of the task force constituted in 1973 in pursuance of recommendations of the Railway Convention Committee 1971. So let's see how this expenditure is classified. Before jumping into the subject, let us know what is classification. Classification means to put things or groups as per their characteristics. A simple example in biology is when the scientists or we arrange plants, animals into smaller and smaller groups. Like animals will put in one group, birds will put in other. Even animals will again classify further into grass eating, non-grass eating, etc. Wild animals, domestic animals. Even ourselves, when we do our household expenditure, we bifurcate it as rent, school fees, petrol, so that we can reduce our expenditure and we will not cause our budget to burst. Similarly, for Indian Railway, when the expenditure is running into crores of rupees, why should not we have it classified? This is the broad classification of revenue expenditure. If you see the first column, it clearly states general services, which is for staff. I will show you how to go about this all a little later. Demand number 4, 5, 6, 7. It comes under repair and maintenance. Demand number 8, 9, 10 is operation, whereas 11, 12 and 13 is staff welfare, retirement benefit and miscellaneous. So you can see revenue expenditure has been classified under 4 heads. The first demand is demand number 3. When we were small, we used to play the game of Chuk Chuk Ghadi. So a first person, the children come together and they discuss. So you can say the babus and the boss like the DRM, GM, they will all come under demand number 3. So even accounts will come under demand number 3. The next is demand number 4. As I said, repair and maintenance is 4 demands. So demand number 4 comes under repair and maintenance. First the staff comes, then the next is laying of the tracks. So whatever repair and maintenance of the tracks, tunnels, bridges will come under demand number 4. The next, if the track is laid, the first thing comes the locos. So any repair and maintenance on locos will come under demand number 5. Once the locos come, all the wagons, whatever is behind carriage and everything will come under demand number 6. Demand number 7, when there are so many tracks laid, track machines are there, motor vehicles are there, that will all come under demand number 7, that is plant and equipment. After that, the next 3 is operating expenditure. Repair and maintenance of locos go under demand number 4. Demand number 5. Track goes under demand number 4. So operating of locos, there it is repair and maintenance. So operating expenditure, that is the driver, will come under demand number 8. Motorman salaries go under demand number 8. The next is operating expenditure traffic. In that the TC will come, the PRS counter staff will come. All those who are related to the train activities of operating of will go under demand number 9. Once the carriage, wagons and all, but it has to run, so it requires electricity, it requires HSD, and earlier there was steam, which has now no more trains are there with steam. So this will come under demand number 10. We are finished with the operating expenditure. The next comes staff amenities. All your railway hospital, railway schools, your clubs, your quarters expenditure will go under demand number 11. Whatever expenditure does not come under any other demand will be booked to demand number 12. Like RPF, your railway zonal training school Udaipur will also come under demand number 12. The last is demand number 13, which is once a person retires, whatever his benefits he gets for retirement will go under demand number 13. So I've shown you the revenue classification. Revenue classification under the since the budget is combined, the railway expenditure will be booked to the major head 3002, that is Indian Railway Commercial Lines. Under 3002 there is sub major head demand number 3 to 13, and then it is minor head, subhead and detail head. I'll show you further bifurcation. Like here, major head function, it will show the function. 3002 will show the railway function. Next, the 3002 is 4 digits. Sub major heads, it will show sub functions. like demand number 3, 4, 5, so 2 digits. Then comes minor head. It will show the program. Just say demand number 3, if you take 200, it will show accounts. So that is 200 is 3 digit. Then sub minor head, it will show the scheme. जैसे 200 में 210 will show accounts, 220 will show cash and pay. Now detailed head, it is a sub scheme. Again there are 2 digits. That is, suppose 210 if you say, in 10, 11 if you say, it will show gazetted officer salary, 12 will show the staff salaries, while 13 will show miscellaneous. Last is object head. That is again 2 digits, that is the primary unit. If it is 01, it will show salaries, 02 DA. So there is a various bifurcation which is given in the finance code. So what I have shown you in this chart, again it is shown like demand number, again below it will come minor head, subhead and detailed head. Like 04, if you see in this example, my 04 is demand, subhead is 200, detailed head is 220 and primary unit is 32. Allocations are usually 8 digits. The first 2 digits will be revenue. Next one is minor head 200, what I told you all. Next is subhead. Suppose if it is 10, so only 1 will come over here. And detailed head, suppose 10 it is, then it will be 11. So we'll be writing as 211. Abstract is A. Like demand number 3, it will come A. 4 will come B. 5 will come C. 6 will become D. 7 will come E. So it is always abstract is linked to the demand. And last is primary unit. That is, it will depend on where is the what type of expenditure is being booked. Whether it is the basic salary, whether DA or bonus, or whether it is contractual bill, which will always come under 32. Direct purchases will always come under 28. Similarly, the various bifurcation is there. Similarly, it is for demand number 16, that is capital. The first two will show the source of the fund. Whether it is capital, it will show 20. Now here I have written 29, that means it is RRSK. The next is plan head. There are various plan heads, like suppose 16, traffic facilities. If it is 33, it will be SNT. Now here I have shown 31, that is track facility. Then detailed head, again with 31 it is linked, and the last two is again primary unit. Detailed head represents the activity, whereas primary unit represents the object of expenditure. Detailed head indicates why the expenditure is being earned, and primary unit shows what is the expenditure. For example, as I've shown over here, 06 to 30, it is the POH of coaches. Whereas primary units, if it is 1, it will show as pay, 2 will show DA, 4 will show HRA, contractual payments will show 32. This is the example of finance code. Like the first column will show minor head, the next is subhead and detailed head. So you can see over here in major head, it is shown as 100, subhead it is showing 110, 120, 130. Similarly, under 110, in detailed head, it is showing as 111, 12, 13, etc. This is the same example in another form. Now we are finished with revenue expenditure. This is about Capital expenditure. The first will show the source of fund, whether it is capital, capital fund, DRF, and the applications, like whether it is doubling, SNT, passenger amenities, ROB, everything will show under plan head. So we are finished with the classification of expenditure. Now we'll go to the next topic. What is the need for budget? The budget is required to know the financial status of Indian Railway. What is budget? Budget is a statement of estimated receipts and expenditure of government in respect of every financial year which runs from April to 31st March. Budget is defined as annual financial statements in Article 112 of Indian Constitution. A budget is a financial plan that shows expected income and expenditure over a certain time period. Why is budget required? Budget is required because it is a constitutional prescription. It has to meet the targets. It helps coordinate various mechanisms. It is also a management tool for control as we come to know what is the earnings, what is the expenditure, where we are falling short. It also helps to evaluate performance, whether we have met the targets or no. Also, it helps to identify areas of concern and where we can improve. It also helps plan for the future. The railway budget compromises sorry, the railway budget comprises of government policies and the principles to be followed in attainment of these objects. The railway budget is presented according to the articles of the Constitution of India. It is an instrument of parliamentary financial control. It is correlated with the nation's 5-year plan. Because railway is a government undertaking, it cannot go beyond the 5 years plan. It has to be with the government, whatever the government has forecast or what it has planned, it has to go according to that. The railway budget takes into consideration recommendations of various parliamentary committees. I'll be elaborating about this later on. These are just the definitions. The annual budget is a statement of the estimated receipts and expenditure of the Government of India for the year and is also known as the annual financial statement. The annual budget is also a constitutional and management document as per para 301 of the Finance Code. The railway budget is always presented as in the demand for grants. It gives the bifurcation for all the demands. It is also given as voted or charged. You all might be knowing what is charged. A charge expenditure is when some court passes an order and whatever payment we do, it is done under charge expenditure. For this, the allotments are received separately. The funds for the charge are sanctioned by the President and are not voted by the Parliament. As far as the earnings are concerned, the Ministry of Railway has full powers to vary the freight rates and the passenger rates being charged for services rendered and not taxes, and therefore are not subject to the approval of Parliament. However, it is a practice and a tradition that proposals for increase in rates are placed before the Parliament and implemented only after the budget is passed. Now let's go to the structure of railway accounts. The railway accounts is prepared in three parts: consolidated fund, contingency fund, and public account funds. So what is the consolidated fund? Actually, if you see the account current, you will always see the consolidated contingency being showed separately. What is a consolidated fund? It is again three parts: revenue, capital, and debt. Under revenue, it will show both the earnings and the expenditure. Whereas for capital, it will show the assets under the expenditure for capital, DRF, DF, RSK. Now there is no more DRF, it is RRSK. Next, debt. This is comprising of loans and advances like HBA, scooter, natural calamity advances, computer advances, etc. Part 2 is contingency fund. This fund is set up by the government under Article 267 of the Constitution. Unforeseen expenditure which cannot be met by reappropriation from the existing grant and expenditure on new services not contemplated in the budget is met out of the contingency fund. I just now told you about charge expenditure. It will go under the contingency fund. The third part is public accounts. It consists of debt like PF, security deposit, earnest money, departmental advances, etc. It also has one is debt and the second is remittances. Like issue of checks under checks and bills is also a remittance. Similarly, what when an expenditure is incurred for postal, defense, and whatever the adjustments which are done, it is done under remittance. Financial structure of Indian Railways. It is the accountal of money. One is expenditure accountal under revenue and works expenditure, and the second is the earnings accountal. So how is earnings accounted for in railway? Money is collected at the stations by either for coaching, goods, passenger. This is deposited by the station master at the in the bank. Then the bank advice is sent by RBI Nagpur. This RBI Nagpur credits or increases the railway accounts. This collection of the station, a receipt is also sent to the cash office. This is the various way how a money which is collected at the station gets accounted in the railway account. The money is deposited in the local bank. A challan is prepared and it is prepared in three copies. One copy is the bank copy, the second is the station copy, the third is the cash office copy. This amount is credited under the railway account of RBI Nagpur. The copy of one copy is sent by the station master to the cash office, and the cash office enters this in the books and it sends to the book section along with the bank challan. The book section enters this as a debit to the RBI suspense account. The challan which is received from the bank also comes to the book section, and the book section enters this as a credit to the RBI suspense account. Thus, one is a debit entry when it is received from the cash office, and the other from the bank, it is a credit entry. So debit and credit reconciles itself. When it does not reconcile, the debit as well as the credit entry does not appear, then a reconciliation is done and found out why the amount does not tally. This is how frauds or anything is noticed. Similarly, the same procedure is for expenditure. A check is issued by railway. It is deposited in the bank by the party. The bank, when it gives the money, advises the party, gives the money to the party, it advises RBI Nagpur. RBI Nagpur reduces the railway account, and at the same time it sends the scrolls to the book section. Thus, expenditure and earnings, both of it gets accounted in the consolidated fund of India. The earnings increases the consolidated fund of India, whereas expenditure both of revenue and works reduces the consolidated fund of India. This is how our expenditure, how we get our amount. One is from internal resources, one is budgetary support, and market borrowings. Earlier in 2011, our internal sources was 20%, budgetary sources support was 47%, whereas market borrowing was 33%. And if you see the 2016-17 figures, our market borrowing has gone up to 51%, whereas internal borrowing, internal resources are 11%, and budgetary support has also gone down to 38%. This is how we have spent our money. If you see, the major portion of our expenditure goes under pay and allowances, which is 30%, whereas pension accounts for 18% and fuel also accounts for 18%. Rest all portion are small portions, that is tolls 3%, miscellaneous 11%, lease charges 4%, etc. So you can see the major expenditure is mostly on salaries and fuel, that is traction and HSD. Why is budget required? A budget is a control mechanism. We have to take control. If we do not take control of our budget and expenditure, it will control us and it will go haywire. There are four major steps connected with railway budget. It is a two-way process. One is executive function, means railway, and parliamentary function is what happens in the parliament. The four major steps connected with the railway budget are one is before and after. Before, executive function is preparation of budget, that is done by the railways. Then once a budget is prepared, it is sent to parliament where it is voted. Once it is voted by the parliament, it again comes back and the railways will execute the budget. Once the railway executes the budget, that is all the expenditures incurred and the year is closed, then appropriation accounts are prepared and it is again submitted to the parliament where it is reviewed by the various parliamentary committees. So hence it is a two-way process, two ways before and two ways afterwards. The way now the first is how the parliament reviews the budget. First, when the budget is prepared and presented, it is voted by the parliament, and after that it is reviewed through appropriation accounts. The appropriation accounts in the parliament do not have the time to review each and everything. Hence, various committees have been appointed who will review it. Like the Public Accounts Committee will review the appropriation accounts. The various big book items and which demands for grant will be reviewed by the Estimate Committee. Whereas the Railway Convention Committee, they will look into the working of the railway and give suggestions. Only voted portion of expenditure is approved. Approval to demands for grants, both capital and revenue, is done by the parliamentary control. Again, approval to appropriation accounts after examination by Public Accounts Committee. As I've already told you earlier, no control over pricing of the commercial undertaking, and there is no control over charge expenditure. Earlier, the railway budget was combined with the general budget, but then it was separated and railway budget was presented separately as per the separation convention. But now the railway budget has again from last year been combined and it has become a part of a general budget. Budget is a money bill. After presentation of budget in Parliament, it is reviewed by the estimate committees. After budget is passed by Parliament and assented to by President, and after appropriation account is passed, funds become available to the Railway Board. Budget orders are issued in two stages. On account allotment for April and May, and full budget allotment thereafter. In case if the budget grant is not sufficient, a supplementary budget grant is presented. These are the earlier, these were all the budget documents which are presented. This consists of the budget documents consist of speech of the Minister of Railway, explanatory memorandum, memorandum explaining the budget proposals, demand for grants, pink book, performance budget. Now this has all been compiled under one head. Thus, the first combined budget with the of railway budget with the general budget was presented on February 1, 2017 by the Finance Minister, Mr. Arun Jaitley. This was the first time since 1924 that the railway budget was merged with the union budget. Now, what is the structure of the railway budget? The railway budget is prepared department wise, demand wise, and primary unit wise. Department wise means for power department, for engineering department, each department prepare their own budget separately. Whatever the departments prepare, they send it to the accounts. The accounts for the zonal railway combines it and then sends it to the headquarter. Headquarter combines the various divisions together and sends it for the railway. At the railway board level, again for all the railways are combined. Thus, as you can see over here, it is prepared for the division wise, then afterwards zonal railway wise and railway board. Once this is compiled, it is presented to the parliament. The parliament votes it, then it goes to the minister of railway. From minister of railway it comes to the railway board. From railway board it comes to the FNCO, and FNCO gives it to all the divisions. Once it comes to the division, again we give it to SPU wise. If you can see SPU, it means to the various departments like engineering, power, SNT. So what is spending unit? It is the smallest unit which is the cost center accountable for execution of specific activities prescribed in the budget. It is expected to regulate commitments as per the provisions in the budget to achieve the targets set in the budget. It is required to monitor the actual expenditure as per budget proportions. This is a chart which shows the bifurcation between the various SPUs. On the here in the first column, you can see the various demands, demand 3, 4, 5, 6, and on the top you can see the departments like general department, accounts, personnel. So you can see demand 3 is for all the departments. Demand 4 pertains only to engineering. Demand 5 pertains to mechanical and a small portion electrical. Similarly, demand 6 pertains to mechanical and electrical department. Thus, you can see how the various demands pertain to the various spending units. The structure of railway accounts, how it is prepared. It will show the actuals of last year which has already been completed. Besides, we give the revised estimate, that is the current allotments which we have already received. In that, whatever changes are required, whether we require more or whether we require less, those changes are given in the revised estimate. At the same time, we give the budget estimate, that is the requirement for next year, so that in February the requirement for the next year is approved. Thus, actuals for last year, whatever additions or surrenders for the current year, and the budget requirement for the next year. Now, how is the railway managed? We have seen the parliamentary control. Now, we will see how is the control of railway finances, how it is maintained for the budget. First of all, the railway budget, whatever the allotments are received, we continuously monitor it. First monitoring is done by way of the budgetary allotments. We review it at the various budgetary stages. In the current year, August review was not submitted as account current has been preponed. Earlier, the account current was prepared late. So that's why and now this year also due to the both the budgets, the general budget and the railway budget has been combined. Hence, August review was not given and directly we gave the revised estimate. After the revised estimate comes the first modification. I will elaborate later on. First modification we give, again it is a review which is submitted in February, and a final modification we give it in March. Besides this, a control of the budget is also done by fixing budget allotments. That is, whatever budget grant we receive, it is divided under for the 12 months depending on what type of expenditure. Like suppose for bonus, it is not given in 12 months, it will be done only in the month in which the budget is given. Bonus is given. Similarly, for PU 28 and PU 32, that is contractual, we again take it in certain months like Diwali, etc. Diwali in the last March, the expenditure increases. So accordingly, we keep a more portion in the month of March during Diwali, etc. Besides budget proportion, we also have the exchequer control. This is of cash outgo. The railway exchequer control is how much checks and bills checks can be issued. This is done so that the checks of railways do not get bounced because even RBI has limited amount of cash. So we should not overshoot that limit. So that is why every time a cash outgo limit is given, and this is not only for revenue demands, it is for everything, even PF, pension, everything. So total limit is given to us up till which each division can or each zone can issue the checks. Besides this cash outgo, we have various reporting systems like the 10-day statement of originating traffic. The second is the monthly financial review. Every month, a financial review is prepared and submitted where we compare the allotment with last year actual expenditure and the current expenditure. We compare it with the budget proportion. We compare it with the last year actual expenditure. Why there is an increase in expenditure? Now the approximate account current has been discontinued as it is a single account current, and the D is the annual reviews which we prepare at the end of the year. Besides this, a budgetary control is done by maintenance of various registers and reviewing the same, like the works register. The works register, all the works which have been approved, a register of the same is maintained, and we maintain what is the financial progress, what is the actual physical progress. You can say now the works register is also maintained in IRPCM where the actual expenditure, the financial progress, what is the when it is approved, it will show where it has been approved. After that, when the work is under the NIT, brief note, everything, the various stages will get reflected over there in the IRPCM. The revenue allocation register will just show the breakup between the various demands, the minor head, the detail head, and the PU. We can say it is the RAR, which is available in our IPAS. The funds register. This is the liability register in which the executive will make an entry of the various indents, their quotations under various hundreds, PUs, etc., and send it to the account so that we will know the true forward liability. Besides there is a built-in internal check that is at the time of passing of bills. Now, how is the budget prepared? When we prepare the budget estimates, we take the actuals of the previous year along with the actuals of the current year till now. Now, suppose if it is a revised estimate, if it goes in October, we have a 7 month expenditure already we have incurred. Against the 7 months, we will see the trend of expenditure and we tell, okay, for the next 5 months it will be this much. it is the increasing. Like last year when we got the 7th pay commission, our expenditure all of a sudden shot up. So for the next 5 months, on the basis, if we go as per the trend, we will not be able to do it. So what is the likely increases, we will give it in the 5 months. Similarly, we give for the next year. This is also based on the previous year actual expenditure, our current expenditure, what is our trend, accordingly what is our physical performance also. Like suppose some new work has come, or like railway minister has just said that we want a Swachhata Abhiyan. So on that basis also we will base this estimates. In control of expenditure, I spoke about budget proportion. So this is divided between the 12 months. Why is budget proportion required? It will help to monitor the month-wise expenditure. So we have the monthly target. It helps ensure that we do not overshoot that monthly target. It also helps as a control mechanism. By doing this budget proportion, like for OT, TA, we come to know what is the increase, in which month we are increasing, which month we are reducing accordingly. Various financial management information system reports are prepared and sent to the spending unit. Just preparing the reports and by accounts and sending it onwards is not sufficient. We also have to report back to the spending units. The spending units are the departments, so that the departments can also. We just compile the reports on the basis of what is available with us. But how will the executive know about it? Besides this, we are just compiling, so we do not know. The spending units are the actually spending. So they will realize immediately that there is some wrong booking, or there is a increased trend. Like recently, they were able to, in OT, they were able to, because of this report, they were able to know, see, there was some wrong booking. Though the staff was not there, some bills were passed. So accordingly, on the basis of these reports which are given to the department, they are able to reconcile. Sometimes if there is a wrong booking, then we can rectify the same by preparing a JV. Recently, headquarter intimated to us that goods expenditure is not a, though there is a goods shed, the expenditure is not booked. So accordingly, then it was seen, and it was that expenditure of the goods stuff was going in some other head. The same was rectified. It also, when we intimate to the executive, they can accordingly give the estimates for the August reviews, revised estimate, whether we have to increase in which heads, we have to reduce in which heads. So on the basis of the reports. Then there is the account current. Account current is prepared by book section. It is just a compilation of expenditure under the various heads. It is prepared monthly. It is prepared both for expenditure as well as for earnings. Actually, account current is just a statement of the government accounting. Similarly, at the end of the year, when the final account current is prepared, it is known as the final account current. Along with it, we submit various schedules, and this final account current is audited. Appropriation accounts are prepared. It is prepared for each revenue demand. It is prepared for various schedules like classification, misclassification of expenditure, wrong booking, etc. And this is submitted to the audit. The audit vets it. When the audit approves it, it is okay. But sometimes the audit, on the basis of their checks, issues the various notes. So then, suppose if it is for the division, it goes to the headquarter. Headquarter audit also audits it. Sometimes they says okay, this can be deleted, but sometimes they still take it up and it goes to the PAC. Then the Comptroller Auditor General of Audit will look into it whether really there is a very big misclassification. If it is there, then it is presented to the Parliament along with the budget. Besides this of revenue, capital and revenue accounts are presented. One is the block account, and one is the loan account. Block account is prepared irrespective of the head of account which has actually been charged, incurred by the railway, as distinguished from the expenditure actually charged to capital account. So actually you say demand 16, it has DF, DRF, RRSK, everything will get reflected in the block account. Whereas in loan account, only capital, that is, if you say P, abstract P, only that gets reflected in the loan account. This is prepared separately because dividend is paid on the loan account. I have already spoken about the liability register. It records the liabilities committed primary unit wise, demand wise. It helps monitor and assess the various liabilities of any point of time. Now, what is the budget cycle? First is the budget estimate, which is prepared in November, December. Then budget is presented to the Parliament in February. Then the budget grant or the budget orders are passed in the month of March or May, depending on whether it is on account grant or the actual budgeting. Earlier, we used to give the August review, which has now been discontinued. After that, the revised and the budget estimate both are prepared together and presented in the month of November. The revised grant we receive on the basis of the revised estimate, that is in the month of January. On the basis of the revised grant and the actual expenditure, we prepare the final modification, that is a reduction on actual expenditure or increase whatever the allotments we require. On the basis of that, we receive the final grant in the month of March. Cash closing is usually on 31st March. Usually 1 or 2 days are available, but now they have trying to reduce that period. Transfer transactions, that is the e-recon, it usually gets closed in the first week of April. And closing of account, which was earlier in June, has now been preponed and now is done in the month of April. Appropriation accounts are, once it is closed in the month of April, by the end of May, June, the appropriation accounts are prepared and they are audited by audit and they are submitted back to headquarters by the end of July. So now we'll talk about capital expenditure. Capital expenditure is also known as demand number 16. The books containing works, machinery, rolling stock is called the pig book. The chief engineer or the engineering department is in charge of the works expenditure, and they prepare the budgetary reviews for demand number 16. For MNP program, that is machines and plant program, it is prepared and coordinated by the CME, that is the mechanical department. Rolling stock is also coordinated by CME at the railway board level. For works expenditure, initially the railway administration formulates a list of new works. Like for the division, first it starts from the division level. The various departments proposes the new works. Whatever new works are there, it is approved by DRM. And for works proposals now, a new program has come, that is the IRPSM. It is approved. Once the DRM approves it, it is sent to headquarters. Then GM looks into it, and again for the various division it all comes together. The allotments are very less. On the basis of the allotment, GM approves the various works, and it is again railway wise is sent to the railway board. Again at the railway board level, the items are scrutinized, the various works are scrutinized, and only those works which are approved by the railway board, that is by the estimate committee, those get reflected in the pink book. This is how the distribution of work-wise expenditure under demand number is seen. The pink book is approved by the railway board. All works approved by the railway board. So once the new works are approved by the railway board, whatever grant, the allotment is limited. So whatever allotment is there, that out of the total allotment, some grant is given for works in progress, which was approved in the earlier years. Some is done for the new works, and then there is a lump sum grant allotted. Pink book wise is given plan head wise, source of fund wise. Whatever lump sum grant is received is given by the railway board. It is given railway zone wise. That is for Western Railway, Central Railway, etc. Now this lump sum grant of the pink book, when it is received by the GM, again a law book is prepared. In the law book, again there are works in progress, which are ongoing works. So the grant is distributed works in progress. Then GM also has some sanctioning powers. So which works are within his powers, he will approve it in the new works. And after that, again a lump sum grant. So whatever the lump sum grant which has come in the pink book, that is distributed by work in progress, new works, and lump sum grant. And this lump sum grant is again divided division wise, because GM, whichever divisions are under him, he will distribute the lump sum grant. So once the lump sum grant is received in the division, again mini law book, it is distributed in the mini law book. So in mini law book, again it will be works in progress and new works. Now there is no lump sum grant. So a division work in whatever is the statement for demand 16 will have pink book work in progress, whichever is for the division, whichever new works which has been approved for the division. Then it will have law book work in progress of the division, the new works which is approved, and mini law book work in progress and the new works. So the sources of funds for capital are capital for which dividend is paid, then internal sources. Earlier it was DRF, which has been discontinued and it is now RRSK. Development fund, capital fund, and alternative sources. That is IRFC, own your wagon, whereas public participation. So this completes the capital budget. Now we'll go to earning budget. These are the various sources of earnings: passengers, miscellaneous receipts, subsidy, safety surcharge, goods, other coaching, sundry. So this is classified under abstract X, that is earnings from coaching, that is passengers. Abstract Y is from goods and abstract Z is other earnings. Like we have from advertisements, big hoardings, sidings, we have buildings which we have given on lease. So everything will come in sundry earnings. So how is earnings budget done? It is estimation of earnings prepared taking into account originating earnings, that is at the station, and apportioned earnings. What is the difference between originating earnings and apportioned earnings? A person can book a ticket at any station if he books it at BCT, but he will be going from New Delhi to Bangalore. BCT it is not, but it will appear in the originating earnings at BCT because we have booked it. Apportioned earnings are when it is given to whichever station it pertains to. So suppose if it is going from New Delhi to Bangalore, it will go through various stations. So for every station, it has been earmarked what will be the booking. So a certain a percentage, suppose if it is a ticket of 1000 rupees, 1 rupee will go to one station, one booking wherever the train stops, and suppose if water is refilled, so then over there also some percentage will come. The TCs are there. So the whatever earnings it has been apportioned for various stations. And because BCT the ticket was booked, our passenger staff and all were PRS counter staff and all are involved. So even their portion will come. Wherever it is the station originates, there the laundry is given, bed sheets are given, cleaning of the train is done. So there also they will have a larger portion. So this has already been done by Chris in their program. Then this includes adjustments with other railways and other government departments. Like military, when they book their tickets, they will not book it, they will not give cash. So the military warrants, whatever comes, that we will at the end of the year. Similarly with postal department. Besides that, we take the physical parameters like passenger originating, passenger kilometers, loading in millions. That is all taken into account while preparing the earnings budget. Also, realization of dues from sundry debtors. For example, how much we are going to realize for sidings, how much we are going to realize for hoarding, etc. It will be done in the earning budget. This is from where the rupee came from. We got the maximum earnings from goods, around 66% in 2014-15. From passengers, we got around 28%. From other coaching, we got around 2%, and sundry, we got only 3%. But now this has stagnated because we are not increasing our fares, our ticket cost is remaining the same. So they are trying to increase our earnings through sundry and other sources wherever we is possible. Earnings project is prepared by the commercial department, CCM of the zonal railway. It is prepared separately for passengers, coaching, goods, etc. Sundry earnings is prepared by accounts because this information is available with accounts. We raise the bills. So, on an estimates prepared by accounts based on information submitted by commercial and engineering branches. Because whether what is the status of the sidings, what is the status of the leasing, etc., they will be known. Why do we require so many parameters of budgetary control? Our expenditure and earnings get reflected in our operating ratio. If our expenditure increases and earnings reduces, automatically our operating ratio gets effective. Many times it happens that executives say, they cannot approve a work in a demand number 16. So what they do, they say, अरे revenue में बहुत सारा grant है, a lot of grant is available. Let's book it to the revenue demand. So what happens? Automatically our expenditure on revenue increases. When our revenue for expenditure increases, it automatically reduces our earning, our surplus, and our operating ratio gets effective. Besides this, various times there are wrong bookings. Our excess projections are done. Many times executive comes to us, "नहीं, we book five, we want 5 crores, we want 10 crores," and actually at the end of the year, hardly some 1 crore gets booking. So there is a saving. When there is a saving, again it is a wrong projection. Similarly, sometimes they do not project it properly. So there is an excess of expenditure. So this is actually a defect in budgeting. Besides this, there are mistakes by there must be one allocation when the estimate has been approved. But by the time it comes and a bill is passed, it is passed in some other allocation. So it is a misclassification. Passing it under, suppose it is a repair and maintenance head and it has been passed under operating. So what happens at the time of costing? It gives a wrong picture. Now there is EMU analysis are done. There are analysis now. A new AC train has been introduced. So for AC analysis, suppose repair and maintenance, we have put it into operating. So we will never know how much we have spent on the AC train. Besides this, when there is a lot of saving and we know it and we do not surrender it, it is also defective because non-surrender of funds we have kept it to ourselves. Some other department or some other division or railway might want the fund and they cannot spend it because they do not have the funds. So that it has stopped some other department or other division from spending it. What is our role of accounts in budget? Keeping the accounts of railway in accordance with the prescribed rules. Compilation of budget in consultation with other departments and monitoring the budgetary control procedures as may be laid down in the relevant orders and codes. Whenever railway, whenever any estimates or any indent or anything is received, we have to first see whether the allotment is available, whether that allotment and that allocation is correct. Generally discharging other management accounting functions such as providing financial data for management reporting, seeing that there are no financial irregularities in the transactions of the railways. This is all the role of accounts. In railway, we can do anything subject to the competent authority sanction under the various SOPs. That authority should have the power, and second, it should be the availability of funds to which that expenditure pertains to. What are the control over expenditure tools? It is the standard of financial proprietary, budget proportion, monthly financial reviews, control against detailed estimates, and schedule of powers. So what is financial proprietary? As per para 116 of the Finance Code, in the exercise of their financial powers, the sanctioning authorities must pay due regard to the following principles. Public money should not be utilized for the benefit of a particular person or section or community. So, second one is the amount of expenditure involved is insignificant. Suppose if it is an amount of 2 rupees or 1 rupee, we will not bother. But if it is a big amount, we have to look into it. A claim for the amount could be enforced in a court of law. The expenditure is in pursuance of a recognized policy or custom. The amount of whenever our expenditure is scrutinized, we have to also see that the amount of allowances such as traveling allowance granted to meet the expenditure of a particular type should be regulated, that the allowance are not on the whole source of profit. It should not so happen that the salary is only 10,000 rupees and he is earning on OT, TA, etc. is 20,000. I've already told you all about the budget proportions as a tool. It is for the purpose of carrying out a meaningful comparison of the actual working expenditure for at the end of the month with the budget allotment. It is divided in 12 months, and accordingly every month for the month expenditure is compared. Also, end of the month is compared. It is necessary to distribute the sanctioned allotment for the year over the 12 months after taking all known factors of disturbance or special features into account. While making the budget proportion, we take into account the throw forward from the previous year. What are the likely? Now, suppose if you have done a AMC for 3 years, then 2 years is balanced, then the 2 years, 1 year we have to take it into account. Whether it will come in which month. Accordingly, bonus, it is only for 1 month. So we should not divide it between 12 months, but only 1 month. Similarly, like salary, it is distributed evenly for all the months. Then other expenditure which is likely to be incurred during the year but liabilities for which have yet to be incurred will also be taken into account. The need to, besides this, some amount while we are doing the budget proportion, we have to keep it into reserve for unexpected liabilities. Anytime anything can happen, so that is why we have to keep some reserve. Monthly financial reviews. It is prepared by the division, workshop, construction, accounts office for the unit to which they associate with. The financial advisor and chief accounts officer should arrange for the consolidation of these reviews. Each division prepares their own financial reviews and send it to the headquarter. The headquarter will consolidate it together and prepare a combined, and it will be sent to the railway board. Railway board scrutinize financial reviews for each railway. The monthly financial reviews shows the expenditure to the end of the previous month against the allotment. It, it is placed at the disposal of the controlling authorities. It is prepared subhead wise and demand wise. There is a specific form for preparing the monthly financial review. This is the form which is as per the Finance Code, Volume 1, Para 513. It shows the demand, the budget allotment for the year, the budget proportion for the year, the actual expenditure for the same period for the previous year, the actual expenditure for the current year, and then it shows a comparison. It compares the current year actual expenditure with the budget proportion. It also compares the current actual expenditure with the previous year, so that any differences can be understood. Why there is a saving, why there is a excess. Besides this, a control is prepared. A control is done on the estimates. Ordinary, no expenditure can be incurred barring a few exceptions unless competent authority sanctions a detailed estimate and necessary funds are allotted. In the code, a clear cut, it is clearly given for what detailed estimate has to be prepared and where a detailed estimate is not required. How the checks of the estimate is done. It is based on the proprietary of expenditure. You can say PIBEC. P is for proprietary of the expenditure. I is for incidence and classification of charges. B is for budget provision. E is for errors and omissions. And C is for competency of sanctions. So whenever estimates are done, we have to check against PIBEC. These estimates, the competent authority, are given in the schedule of powers. Now a new model SOP has been given by Railway Board, and according to this model SOP, we have to see all expenditure is sanctioned. The model SOP has delegated powers right from the GM level to the lower authority. It cannot be re-delegated, and there are canons of financial propriety. This schedule of powers is as per the codes, rules, and as per the canons of financial propriety. But just because it is sanctioned, if funds are not available, it cannot be go ahead. Now, wherever mistakes are done, we it can be either during our internal check or during audit objections or the spending units, that is the department intimates to us. Whenever they intimate, accordingly we have to prepare a JV. But if it is at the end of the year, nothing can be done. Once the closure of accounts are done, it cannot be done, except then we have to intimate the this, and the books have to be reopened, for which a separate provisions are available. Why is this budget required? This budget is required because we have a lot of issues, like there is a higher demand for freight and passenger transport. There is a need for capacity enhancement. Technological updation is required, greater competition from other roadways, and there is a major investment in highways and network upgradation. There is an increase in freight. Great, we have to give greater passenger amenities. Besides, passenger fares and pricings have been subsidized. Besides this, we have to improve the efficiency of our production units. These are all our current issues, for which our allotments are very less. So that is why with our less allotments, we have to keep into mind all this, and we have to work for the betterment of the railway. Keeping all this in mind, because railway is a government undertaking, they have come up with the accurate accounting of Indian Railway, for which asset registers have been prepared by the various departments, because they want to go in for a commercial type of accounting. So ICAI is a channel partner. There are 130 CAs, assistant railways all over India, who are looking into it. Approximately 20 lakh fixed assets are being captured in the FARs. The FARs have 18 categories, which consist of land, building, track, rolling stock, S&T, medical, there is for furniture, fixtures, etc. These have been captured in various columns, 15 to 20 columns. There are fixed formats have been given by the railway board. Besides that, web-enabled IT dashboards have been developed, and the progress is monitored. Trainings have been given by the CAs, the central team of the ICAI. Besides it, the training is given in the Nair, that is our training college at Baroda and Secunderabad. Thank you for your attention. In case if there are any mistakes, please let me know. I am not an expert